In a world teetering on the edge of financial uncertainty, one question looms large. Is gold the ultimate safeguard against economic turmoil? The global economy is caught in a dangerous spiral. The United States, the largest economy on Earth, has accumulated over $36 trillion in national debt. Interest payments alone are projected to hit $952 billion in 2025. Yet there is no austerity in sight. Instead, government spending increases and tax cuts continue, a recipe not for stability, but for persistent inflation. Inflation acts as a stealth tax on citizens, quietly eroding purchasing power and transferring wealth from the people to the state. This isn't a U.S. issue alone. From Japan to Europe, the world's developed economies are drowning in debt. Historically, the politically convenient solution has always been the same: inflate the debt away. In this environment, gold becomes not just a commodity, but a monetary lifeline, a timeless store of value, immune to the printing press and beyond the control of any single government or central bank. The official U.S. gold reserves present a troubling paradox. America claims to hold 261 million troy ounces of gold, valued at just $11 billion, an absurdly outdated valuation based on a statutory price of $42.22 per ounce. The last full audit of Fort Knox happened in 1953. Subsequent inspections have only covered small portions of the vaults. With no transparency, one question becomes urgent. Is the gold truly there? Around the world, trust in U.S. custodianship is waning. Germany, Europe's largest economy, has over euro 100 billion worth of gold stored abroad, much of it in New York. A growing political movement in Germany has called for repatriation, signaling declining confidence in the safety of those foreign reserves. Meanwhile, China is taking a different route, divesting from U.S. treasuries and quietly building up its gold reserves. In 2013, China held over $1.3 trillion in U.S. bonds. Today, that figure has dropped to around $765 billion. The signal is clear: a strategic decoupling from the dollar and a pivot toward hard assets. The Bank of England is also under pressure, experiencing significant gold withdrawals and growing fears of delivery delays. The demand for physical gold is rising, and with it concerns about defaults on paper claims. Compounding the problem is the explosion of gold derivatives. As of March 2025, the Eurozone's notional exposure to gold derivatives hit euro 1 trillion, up 58% since late 2024. Many of these contracts are uncleared, opaque, and systemically risky, setting the stage for a potential financial shock. So how does the supply of gold measure against the tidal wave of debt? As of 2025, global debt has surpassed $315 trillion. In contrast, all the gold ever mined amounts to roughly 208,000 tons, or about 6.69 billion troy ounces. At today's price of $3,400 per ounce, the total value of all the world's gold is around $22.7 trillion, just 7% of global debt. To match the current global debt load, gold would need to be revalued to over $47,100 per ounce, more than 13 times its present price. That's not speculation. It's a reflection of how deeply fiat promises exceed physical reserves. Each year, the world mines about 3,300 tons of gold, approximately 106 million ounces, worth $360 billion annually at current prices. Yet global debt expands by trillions each month. Gold cannot keep up. It's physically impossible, and not all gold is accessible. Nearly half of the world's gold is locked in jewelry, cultural artifacts, or permanent private holdings, from Indian temples to sovereign wealth vaults. These holdings are unlikely to re-enter the market. That leaves only 50% or less of global gold stock truly available for monetary or trading use. If we revalue just this accessible gold against total global debt, the required price per ounce would skyrocket to over $94,000, perhaps even $100,000. This is not sensationalism. This is a reflection of the systemic imbalance between real value and digital promises. Every dollar, euro, and yen printed further weakens confidence in fiat currency. Gold, on the other hand, remains incorruptible, immutable, and borderless. It is not controlled by any government. It cannot be printed, inflated, or erased. Gold stands as the only true fiat alternative and the only asset capable of challenging the hegemony of the U.S. dollar. In a financial world built on paper and promises, gold is the foundation of trust. Gold is not a relic of the past. It is the anchor of the future. And today, more than ever, it is the need of the hour.
Thanks for watching. Don't forget to like the video. Another video is coming soon. Share this to your friends. Press subscribe button and like button.